Hi everyone. The time I spent away from trading helped me get a little perspective on what was right in front of my face the whole time. Remember that in one of the early videos I concluded that flat is sad and volatility is key to making money. Makes sense, right? Well, look at my real algorithms. They have all been limited to a very flat Bitcoin. As soon as it exceeds 0.5% over 5 minutes, then all of my algorithms shut down, go to sleep, and do not wake up until Bitcoin is back within those boundaries. And these boundaries are boringly and frustratingly sad. The reason for this was a combination of fear of the unknown and uncertainty due to lack of experience. I just didn't know how to set everything up for a volatile and unpredictable market. But I guess most money is actually made on high volatility, not on flat. And I have been trading flat. Now look at what happened yesterday. In an uncharacteristic turn of events, the main driver of volatility this time was Ripple, in the wake of their recent developments in the lawsuit with SEC. This is some real action right here. Yeah, and check out the scale, it's 10%, so it's been going all crazy. Then after the news, Bitcoin also followed. This is what it looked like. It's been, pretty wild. And then, as we know from previous experience, many other coins followed. This is Matic right now, but here is what happened to it during all of that movement. See, it was rather flat, then it went all crazy. I am sure that many, or even some of you watching, have been able to make some money during this whole thing, and good on you for that. But I missed the boat completely. If we look at more graphs, let's just pick a more or less random coin. Here is XLM, and it was also doing quite interesting things. I unfortunately do not have the trades data here. I only have the mark price line in yellow and the ticker price line in purple. But I guess like right here, when it was going up and down, there should have been some pretty nice shots that could have brought in some profits. Especially in places like this, where the mark price diverges from the ticker price quite significantly. Even without the trades data, I can see that there was a shot right here. And it was about 3%. Well, it's just a guess, but I can see that there is action here. And also right here, these are definitely shots because the mark price was not catching up with it. So the opportunities are here, and I applaud those who actually took them. For me and my levels of experience, the problem with this type of volatility is that, from what I've seen, it is quite rare. And if I were to set something up for this type of behavior, I would need to wait a day, a week, 2 weeks, however often this happens. I would have to wait to actually verify whether my thing works or not. But I guess there is no other way really. Trading on flat is indeed sad, and it's probably not making you anywhere near the level of money that you do on volatility, even if you set up your algorithms correctly. Some of the other issues and limitations for my trading could actually be in my own head. Remember that I set a goal of getting a cup of coffee for $3? Well, that goal was achieved pretty quickly, but then the needle had barely moved ever since. I'm stuck on this level of money. So to continue the theme of coffee, let's get to the next ambitious but still reasonable goal. Let's get a 70-ounce bag of coffee beans for $20. How about that? So in order to get there, I am currently running the following algorithms. I have these two guys set up with a whitelist, and they're permanently running with a very small distance of 0.6, but here I have a bunch of coins that are very stable, that have proven that they are safe to trade on with lower distances on a flat market. Yeah, these are flats. So yeah, here is the selection for my buy algorithm, and on the sell side there is less of them, but they're just there, always trading, and are very safe, at least in my eyes. And then I'm also running a familiar set of algorithms for active markets, but now, as you can see, I have increased the distance to, again, a very safe 1.25. Why am I doing that? I was just talking about getting into a volatile market, guns blazing. Well, before I get in there, guns blazing, I need to figure out how to set up the volatile market algorithms. And I also have actually a bunch of emulated algorithms running for a volatile market. We'll see how that goes. I've already had them before, but I've never actually analyzed what they've shown me. So I'm running all this just not to waste time and resources. Maybe I'll catch some fish here with these algorithms, maybe not. I'm just doing that for now to avoid having my MoonTrader core idling and doing nothing. Yeah, so for example, in the last 2 days, I had 3 trades with my flat algorithms that are doing the 50 plus leverage whitelist, and I've got $2, which is better than nothing, and that's all due to the fact that I have increased the order size to 400. Yeah, it's been pretty safe. It's very little drops in the ocean, but okay, $2, fine. We're aiming for 20. And meanwhile, I'll get to designing something more befitting a volatile market, and I will show you what that looks like next time.